The partnership earns an income of 500,000 pesos. The partner's agreement on profit or loss in the previous video is 1/3 of each partner. Jane is also an industrial partner and will receive an annual salary of 100,000 pesos, and a 5% bonus in excess of 300,000 pesos income before bonus, and before tax. The partnership will give 10% interest on capital. Jane presented to partners the distribution of income. Here's the computation. From 500,000 net income, 100,000 is allocated to an annual salary of Jane. Since Jane works in the partnership, there is also an agreement that if the income exceeds 300,000, Jane will receive a 5% bonus before the bonus and before taxes. The 200,000 pesos excess is multiplied by 5% to get the bonus of Jane, which is 10,000 pesos. The 33,000 pesos is allocated to interest on capital of partners. In the previous video, the initial capital is computed based on the bonus method. That's where we got the 110,000 capital of each partner. The 110,000 is multiplied by 10% to get the interest. After the allocation of salary, bonus, and interest, the remaining profit is allocated based on the profit or loss ratio, which is 1/3 of each partner. To illustrate, 500,000, less 100,000 annual salary, less 10,000 bonus, less 33,000 interest, equals 357,000. The 357,000 divided by 3, will result in 119,000. The subtotal amount of each partner will be the partner's share of profit. To check, the total allocation of each partner should be equal to 500,000. The next video is about partnership dissolution.